For more on the future of international trade, my colleague Anand Naidoo spoke with James Bacchus. Bacchus is a former U.S. congressman, and he previously served as a chief judge for the WTO.
Trade has to be part of our economic strategy. If one looks at the first 4 years of the Obama administration, it's not quite clear that that was always a high priority, but here in the 5th year of his presidency, it's become an increasingly high priority, and it well should be, because trade is a way to spur growth without spending additional money. In fact, lowering barriers to trade would be a huge tax cut for the entire world.
Here's something about the WTO. I mean, it's felt that negotiations have been so slow that the United States has, in effect, got tired of waiting for this, and they've gone it alone in many respects. We look at the Trans-Pacific Partnership negotiations that are taking place, separate negotiations taking place with the European Union. Is that, in effect, what has happened right now? The United States is saying, we're going to get on with this with other regions in the world.
It's too soon to say. I hope not. I believe that the United States continues to understand the need for the primacy of the global trading system, because that's where the big bang for the buck is in terms of growing world trade and the world economy. But I personally support these regional efforts very much. The Trans-Pacific negotiations, the transatlantic negotiations, the Pacific Alliance that's being formed by a number of the Latin countries, the ASEAN efforts as well to come together. These are all helpful, but they will be especially helpful if they are building blocks toward returning to trying to deal with these kinds of issues globally. There are many issues that can only be dealt with globally because of their very nature. Agriculture is one, for example, and that's a huge issue worldwide.
The WTO has cut its forecast for global growth to 2.5% from 3.3%. And it is saying that it cut that forecast because of the slowdown in Europe. But what about the slowdown in emerging economies like China, India, Brazil? Is that going to factor into it at some point?
That's a very good question, because as you obviously know, we're seeing a slowdown in the BRICS that created so much of our growth globally over the past 5 or 6 years. Now they're all slowing in different ways. China down to 7.5%. That's pretty slow for China. The other BRICS growth has largely disappeared. There are different reasons for that. One is the easy things have been done in those economies, and now they are reaching the need to deal with their structural problems, which differ in each of these countries. We have our own structural issues in the United States. Another is that there is the expectation that the Federal Reserve in the United States will be pulling back, tapering on its quantitative easing, on its efforts to pump money into the bond market. If it does that, then interest rates are going to increase in the United States, and you will see capital come back from a lot of the BRICS and the other emerging economies into the United States. And that would be of concern to them as well. I think we're already seeing some evidence of that.